Hello, it's Brian Shannon from Alpha Trends Blogspot. Today is Friday, the 10th of August, 2007. We've got the market closed now. The S&P 500 finished at 145.40. That's a gain of a penny today. So it did close right above that 200-day moving average. The 200-day moving average is at 145.36. So it closed just a couple pennies above that. That's really not too significant. It's more of a psychological event, closing above that 200-day moving average, than anything that's really important. We saw the Federal Reserve get involved in the markets today. We've got a downtrending market, so I don't know how effective that's going to be. But for the week, the market did finish with a gain. Last week it finished at 143.80, so we saw a little more than about a $1.60 gain for the week. And it sure felt a lot worse than that because of the volatility that we saw. We had 3 good days early on, and then just got smoked yesterday, obviously, and today was actually pretty neutral. So when you're looking at a 10-minute time frame, you can see that the market gapped down this morning, but didn't cut to a lower low below that 143 level. So that'll continue to be an important area of potential support. I think breaking below that could put further pressure on this market. So for now, 143 is going to be important going forward. And as far as potential resistance goes, we've got that 5-day moving average that's more neutral than anything right now. And that's right at about 146.55, let's just call it. Overall, I think on the intraday time frame, it's showing more of a neutral market in here, a market that's kind of searching for some support. And it's been very volatile lately, obviously, and I think the volatility should continue. It's important to note that we do have a declining 50-day moving average, so you still want to treat this market as guilty till proven innocent. It had an up week, but there's still bigger problems here. The market made it up to that declining 20-day moving average. If you look at at Monday's video, that's where I kind of thought that the rally might encounter some resistance. I didn't expect it to just tag it and then move lower. But that's also this prior level of support over here. So right around that 150 is obviously a level where there are sellers for now, but it's pretty far away at this point too. We had the Federal Reserve come in this week and leave monetary policy alone. That is prior to their movements in the capital markets today. But the average price since the Federal Reserve meeting has now dropped another $1 down to 147. So most people who purchased, unless basically they bought today or early Monday, are in a losing position in the S&P 500, and that puts more pressure on the market. So just time to continue to go slow in there. That's nothing has really changed this week. The semiconductors, I've been talking about this group, looking at the daily time frame, saying that basically my view is neutral on this market right now. It's kind of back in no man's land. You could make a case that it's tracing out a head and shoulders top, with this being a shoulder, a big head, and another shoulder here. I'm not going to put too much weight in that pattern. I just wanted to point it out. But basically, we've got the moving averages crisscrossing. That shows neutrality in here. It's in an area that had been prior resistance, and it seems pretty neutral in here right now. The intermediate term time frame also says basically neutral market in here. They did finish with a gain of 2 cents today, so basically unchanged, kind of searching for support near this 5-day moving average in here. For the week, they did finish with a gain. They closed last week at 37.09, so they did see a gain of 71 cents, or about 2% for the week. But again, it felt a lot worse than it actually was. So we could take a look in here too, and look at the average price that they traded at this week. The average price they traded at this week was about 37.67. So they did show a little bit of stability in here, but again, neutral on the daily time frame, neutral on the intermediate term time frame. Really not much happening in there. The IWM was the area of strength today. This market was finished with a gain of 71 cents. That's about just a little bit less than 1%. And it's been hit the hardest as well. You can see that it's still closing below this 200-day moving average. And that 200-day moving average is still up at $80 a share, so it's still $1.50 away. But the market did show some signs of stability. Looking at last week's close of 75.38, you can see that we gained a little more than $3 this week, and we saw very big volume in here as well. So the market came down to this longer-term trend line from the 2005 lows, and also the area where it had seen some prior support near that $75 level. So perhaps the IWM is starting to stabilize, but it's still very volatile in there, probably too volatile for most participants. You've got to look at the shorter term time frames. Looking at this 30-minute time frame, it's actually pretty good to see that this market gapped lower today below that advancing 5-day moving average, but then quickly rallied above it and held on to that the gains for the day. So the IWM is starting to show some better signs for the overall market. This had been the leader on the way up. Now it's just, again, it's not that it's so bullish looking, because again, we've got this declining 50-day moving average. We've still got it below the declining 20-day moving average that you can see was touched again here today, acted as resistance up near that $80 level. So there's still sellers in there, but it's just starting to show some signs of stability. Nothing more. Doesn't mean that it's a buy by any means. The NASDAQ 100 was pretty interesting trading in here today. If you'd looked at the blog intraday, I had posted a couple charts with the daily VWAP. I just wanted to look at this weekly time frame. You can see in here that on the weekly time frame, the trend line is still intact. It's probably right down, you could say, at about 46.26. So still about $1 above that trend line, and also above the advancing 200-day moving average. So we'll see if the market can continue to stabilize in here. You still have to be very careful. We've got this 50-day moving average flattening out. Yesterday I said that basically I'm neutral on the NASDAQ. I think that's the proper place to be. You see how initially we had the 10-day moving average act as resistance, then the 20-day moving average. Now it's having a hard time recapturing that 50-day moving average. The one encouraging time frame here is the 10-minute time frame, and we had seen last week that the $47 level was important support. The market broke down through that level early on, trapped the sellers in there, and from failed moves came this fast move. That level was then tested once again as support after it moved up, and you can see that it's starting to show some signs of stability, but we do still have a declining 5-day moving average, so you want to treat this strength very suspiciously. There is not really any signs that the buyers are back in control at all. Best case, you could say, is neutral in here, but looking again at that daily time frame, you can see that we saw a pretty good volume in here today as it started to stabilize, but it did finish with a loss of 43 cents, or about 0.9%. So if you bought yesterday and you were holding today, it doesn't look as good as what I think the intraday action was showing on these shorter term time frames. And if you look at the 1-minute time frame, I had outlined earlier in the day how it came down and found some support at that 1-minute time frame. It then traced out this inverted head and shoulders pattern. That was broken. It rallied past there. The market came back down, kind of toyed with this daily VWAP for the rest of the day, and found a little bit of buying into the close, but still just very unstable, I think, is the best way to look at this market, and you still have to be very careful next week.